2021 was not a good year for gold as it lost about 4%, the first negative yearly returns in the last 6 years. This follows strong gains of 28% and 24% in 2020 and 2019 respectively. Last year, we expected gold to remain sluggish in the early part of the year but to end on a positive note. Based on a technical study, we expected gold futures on the multi-commodity exchange to touch 56,000 Indian rupees. However, the yellow metal ended the year lower, although it was stuck in a broad range of $1,680 to $1,920 for most part of the year. Investment demand, aided by the unprecedented liquidity provided by central banks, powered the rally in the preceding 2 years. However, in 2021, several factors played out against the precious metal. 1. There was a significant drop in investment demand because of outflows in ETFs. Investment demand in the first 3 quarters of 2021 dropped by 38% to 700 tons, according to latest World Gold Council data. 2. The dollar picked up strength since June and thus, the dollar index appreciated by nearly 7% in 2021. 3. As economies opened up, investors started playing risk-on game and this is not particularly the favorite turf for gold. Finally, the U.S. Federal Reserve, towards the end of the year, announced the timeline to end its asset purchasing program and the latest dot plot indicated 3 possible interest rate hikes in 2022. However, despite so many negative factors, gold avoided a deep fall in price. Jewelry demand, which went up by 48% to 1,323 tons last year, can partly explain this. Now it is almost certain that the Fed is likely to start raising rates in 2022, although the pace may vary from the expectation. In that sense, Treasury bills, which come with safety as well as an interest payment, might appeal more to investors, which can result in some asset reallocation from gold to U.S. Treasury. In addition, increase in U.S. interest rates can further strengthen the dollar. This will certainly have a negative impact on gold prices. On the other hand, rising inflation across all regions can boost gold as it is seen as a natural hedge against rising inflation. Also, economic recovery means more disposable income with people, which can translate into better consumer demand. Particularly, jewelry demand, which is already on a rise, can push demand up for the yellow metal. That said, the Omicron variant of coronavirus, though deemed to be less fatal, is proving to be more contagious and is spreading fast across regions, particularly Europe. The weekly COVID report by the World Health Organization shows that in the week ended December 26, the number of new COVID-19 cases in Europe increased by 39%. New daily cases in some countries have already surged to record levels, straining the healthcare system. Global fresh cases, too, are up by 11% in the corresponding week. Governments have started imposing restrictions, and this is creating fresh uncertainties on the economic growth front. To summarize, central banks closing the liquidity tap and possible rise in interest rates can have negative effect on gold prices. However, hardening inflation, bettering jewelry demand, and continuing ambiguity around coronavirus and resultant uncertainty in monetary policy can support the yellow metal. The slowdown in Chinese economy is also seen as a cause of worry for the global economy. Overall, the positive factors for gold might outweigh the negative factors, and, therefore, prices can be expected to appreciate in 2022. Also read, Fixed Income Outlook for 2022. Gold began rallying from about $1,200 in October 2018, which eventually led to the breakout of the critical resistance area of $1,360 to $1,400. Following this, the yellow metal picked up more momentum, establishing a strong uptrend. This continued until gold hit a fresh all-time high of $2,075 in early August 2020. Thereafter, the price began to soften and in 2021, it largely held in the broad range of $1,680 to $1,920. Ideally, until gold moves out of this range, the next leg of trend will remain uncertain. However, the support band of $1,680 to $1,700 is holding strong and the likelihood of these levels getting breached is low. Even if price slips below $1,680, the 50% Fibonacci retracement level of the prior rally at around $1,620 can be expected to arrest the decline. In our view, gold will most likely touch $1,920 in 2022. A breach of this level can induce more upward momentum. The overall trend is bullish and there are significant support levels. Although gold might experience some weakness in the first few months of 2022, it can be expected to produce positive returns this year with potential targets at $1,920 and $2,075. Gold futures on the multi-commodity exchange is forecast to reach 52,300 Indian rupee. If the momentum sustains, it can retest 56,000 Indian rupees levels during the year. Also read, Equity Outlook for 2022. Irrespective of the market conditions, one can always maintain 10 to 15% of gold in overall portfolio as it is an effective diversifier. If you would like to own gold, sovereign gold bonds issued by the RBI and gold exchange traded funds offered by mutual fund houses are the preferred option. For those who don't have a demat account, gold funds are available too. Courts cannot interfere with the commercial wisdom of a committee of creditors in an insolvency case, except in cases of material irregularity in the conduct of proceedings, the Supreme Court of India has ruled, in Engatlangthar vs Punna Pragati Infrastructure, an episode in which Thar, a member of the Meghalaya Legislative Assembly, of the National People's Party, bagged a construction company called Meghalaya Infratech, for about 65 Indian rupees crore. Punna Pragati Infrastructure, which lost in the bidding for Meghalaya Infrastructure at the National Company Law Tribunal, took the issue to the NCLAT, on the grounds that it had not been given time to revise its bid. It won. Dhar, represented by Mukul Rohtagi, went to the Supreme Court, pleading that the NCLAT should not have interfered with the commercial wisdom of the Committee of Creditors. Two banks, Allahabad Bank and Corporation Bank, were the lenders, holding voting rights of 68.34% and 31.66% respectively. The Supreme Court agreed with the appellant and overruled Nklat's order. Judges L. Nageshwar Rao and B. R. Gavai found no material irregularity in the acceptance of Dhar's bid for Meghalaya Infratech. On the plea that Punna Pragati had not been given the time it requested for, the Supreme Court looked into the minutes of the meeting and found out that the bidders had been previously forewarned that no further time would be given and any absentee at the bidding would be excluded, because the process was nearing the 180-day deadline. As such, there was no irregularity. It is trite law that commercial wisdom of the cock has been given paramount status, without any judicial intervention, for ensuring completion of the processes within the timelines prescribed by the IBC. It has been consistently held that it is not open to the adjudicating authority or the appellate authority to take into consideration any other factor other than the one specified in Section 30 or Section 61 of the IBC, the judgment said. Asian Hotels, a leading hospitality group that owns five-star hotel Hyatt Regency with 401 rooms near Mumbai Airport, is in a state of disarray. Sources told Business Line that the infighting among the company promoters has reached the corridors of market regulator SEBI and multiple complaints have been filed with allegations ranging from mismanagement, funds siphoning to prohibited related party transactions and sketchy shareholder-related disclosures. In 2010, Asian Hotels was born out of the demerger of the Asian Hotels Group, the other two entities being Asian Hotels and Asian Hotels, both of which are traded on the stock exchanges with a respective market capitalization of 165 Indian rupees crore and 219 Indian rupees crore. Then, Asian Hotels turned the most sought-after stock since it owned the marquee properties at Mumbai and Delhi. J.W. Marriott near New Delhi International Airport is owned by Arya Hotels and Consultancy Services, a subsidiary of Asian Hotel. The American multinational hospitality chain Hyatt Hotels Resorts was the brand partner for Mumbai's Hyatt Regency, but it had shut the hotel in June 2021 since the promoters had stopped extending the fund. Still, Delhi's J.W. Marriott is up and running, and there were reports that Asian Hotels had diluted its stake in Arya, but the details are sketchy, the sources said. SEBI is now investigating the matter involving Asian Hotels, and it is likely to freeze the promoter holding in the company, the sources said. trading in the company's shares was suspended on January 3. Sudhir Gupta, an executive whole-time director in the company, has dragged Asian Hotels to the NCLT, which is yet to come up for hearing. Two independent directors of Asian Hotels had resigned last year, and the audit committee of the company has not been functional since June 2021. On December 21, 2021, Sudhir Gupta, the executive director of the company, told the stock exchanges that Asian Hotels company secretary Vivek Jain had resigned. He also said that the company did not have a functional board of directors, and hence he was sharing the information in his personal capacity. Prior to this, the company's statutory auditors S.R. Batlaboy Co. LLP told SEBI in September 2021 that they were resigning. The auditors told SEBI and the bourses that they had not received the required information from the company to conduct an audit for the financial year 2020 to 2021. Nobody from Asian Hotels could be reached for comment. The National Statistics Office's first advance estimates of GDP for each fiscal year are based on a rough extrapolation of headline indicators for the first 6 to 8 months and are mainly intended as inputs to the budget-making exercise. The latest release estimating that real GDP and nominal GDP growth rates will be at 9.2% and 17.6%, respectively, in FY22 must therefore be read with caveat. Building on the low base effect caused by the pandemic, the NSO expects manufacturing, construction and trade, hotels, communication and transport to take GVA growth to 8.6%. Should this come good, both agriculture and industrial activity would exceed pre-pandemic levels this fiscal, while services activity would be just below it. The advance estimates are even more optimistic on nominal GDP, expecting it to grow 17.6% in FY22 against a 3% contraction last year. As this nominal GDP estimate makes up the denominator for the union budget's deficit calculations, the generous expansion assumed will allow the center additional elbow room on expenditure. As the advent of the highly transmissible Omicron or the rapidly spreading third wave in India weren't in the reckoning until very recently, there are some aspects to the above estimates that could face challenges. 1. In arriving at a GDP growth forecast of 9.2% for FY22, NSO assumes that economic activity in the second half would accelerate over the first half, with 58% of agricultural GVA, 53% of industry GVA and 52% of services GVA for the full year expected to be achieved in the second half. While agriculture may yet improve its performance, disruptions from the third wave looked set to impede both industry and services performance. The big rebound factored in trade, hospitality, communications and other services could be particularly tough to achieve should lockdowns and mobility restrictions make a return. 2. The expenditure-wise breakdown suggests that the NSO is pinning its hopes on a significant pickup in private investment. While private consumption is expected to grow a muted 6.8% and government expenditure 7.6% in FY22, gross fixed capital formation is expected to expand 15%. While government capex may well lend a helping hand to this, India Inc. is just about beginning to talk of expansion plan. We need to watch whether Omicron-related disruption forces a rethink. It is also interesting that, in expecting nominal GDP growth of 17.6% against a real GDP growth of 9.2%, the NSO is factoring in inflation at 8.4% for FY22. If these are indeed the general inflation rates prevailing in the economy, the MPC faces an even tougher trade-off between stimulating growth and reining in inflation than we think. Karnataka's main opposition party Congress kickstarted its padayatra demanding the immediate implementation of the Mekedatu project. Thousands of Congress leaders and workers started the 165 kilometers long padayatra labeled Walk for Water from Sangam, in Ramanagara district, in spite of the state government's weekend curfew barring the assembly of people, due to increasing COVID cases in the state. The padayatra will culminate on January 19, with a massive public rally in Bengaluru. The march was flagged off by Congress leaders including Leader of Opposition in Rajya Sabha Mallikarjuna Kharge, KPCC President D.K. Shivakumar, former CM Siddaramaiah and Veerappa Moily, former Deputy CM G. Parmeshwar, the lone Congress MP from Karnataka D.K. Suresh and several legislators of the party beating drum. Congress said the curfew has been imposed to only thwart the party's march. Several of the Congress leaders taunted the state government, saying let them take action, if they dare to. Mekedatu project. The Mekedatu project involves the construction of a reservoir and Kaveri River on the border with Tamil Nadu. While Karnataka says the reservoir would not only help augment drinking water supply to Bengaluru, but also generate about 400 megawatts of hydroelectric power, Tamil Nadu has strenuously objected to it, saying it would reduce the flow of its due share of Kaveri water. The dispute is currently with the Kaveri Water Tribunal as well as National Green Tribunal, apart from several cases being heard by the Supreme Court. Even the centre is yet to give full consent to the 9,000 Indian rupees crore project. KPCC President D.K. Shivakumar, who is spearheading the padayatra along with his Member of Parliament younger brother D.K. Suresh, declared Namaniru, Namahaku. Nobody can stop our march. They have imposed prohibitory orders only to prevent our agitation. We won't be cowed down. Former Chief Minister Siddaramaiah said just like the padayatra he undertook in 2010 against illegal mining in Bellary, which helped bring down the BJP government, this time too the Congress party would continue its fight to ensure justice for the state. Meanwhile, the state government seems to have adopted a wait-and-watch approach. Chief Minister Basavaraj Bommai, who held a cabinet meeting, said, Congress will have to answer to the people why they are undertaking the padayatra amidst the pandemic. They are trying to do politics just because elections are close. This is a politically motivated yatra, but people won't be fooled. The district officials have served notice on them for violating COVID protocol. We will take action under the law. The word non-fungible tokens, or NFT, has been knocking about a lot these days. While most people have heard about NFT, not many may know what it exactly is. NFTs are basically packets of data that can be stored and transacted digitally, recorded on a blockchain that has so far been seen to represent digital creative works and files such as videos, audios, photos. NFTs can also be called digital representations of real-world objects like art, music, in-game items and videos. They are bought and sold online, mostly with cryptocurrency, and they are generally encoded with complex software. A big advantage is that anyone can verify the asset's authenticity and ownership, thereby creating clear titles for each NFT. Midwest Tungsten, a supplier of metal for industrial uses, recently paired a blockchain with a 14.545-inch, 2,000-pound cube of tungsten to produce a non-fungible token. Amitabh Bachchan's Madhushala NFT collection, his father's poem, recorded in the superstar's own voice, grossed a total of $756,000 or 5.5 Indian rupees crore worth of bid. Artist Beepless Crossroad fetched $6.6 million on Nifty, whereas a digital collage of images by Beeples sold for $69.3 million at a Christie's auction in March. Non-fungible tokens are an extremely valuable asset due to their unique nature. For example, a share or a Bitcoin is fungible. Trade one for another Bitcoin, and you'll have exactly the same thing. NFTs, however, are a one-of-a-kind trading card, which does not mean you cannot trade one NFT for another, of course. It just means that if you trade one NFT for another, you'll end up with something completely different. The introduction of NFTs, and the millions of dollars that they are being transacted for, have raised concerns around their safety, identity, and authenticity. However, considering the humongous amounts of monies being flooded into the NFT scene, with cricketers and Bollywood icons such as Amitabh Bachchan and Salman Khan launching their own NFTs as well for purchase, NFTs have gained legitimacy over time. However, what is concerning is that there are still no laws or regulations that govern NFTs, and considering the amount of time the cryptocurrency bill took to be drafted, an effective NFT law is still a long way to go. While India has laws dealing with cross-border transactions, such as the Foreign Exchange Management Act, which oversees cross-border commercial activity in India, they could find to be lacking teeth in cases where assets such as NFTs are concerned. Under FEMA's software and intellectual property laws, NFTs can be classified as intangible assets. However, because the specific location of crypto assets cannot be determined, the jurisdictional issue cannot be fully addressed. Supporters of NFT say that owing to the fact that the contractual obligations of smart contracts are performed automatically, these transactions should lead to fewer legal disputes considering the performance of the agreement. That said, the lack of robust laws governing such digital or smart contracts, digital exchange of assets that might not be stored at one location, possible untraceable breaches, is what is perhaps still confusing NFT enthusiasts. What are the legal issues that NFTs could create for their buyer? The first concern that NFTs bring about is the right the buyer gets with the purchase. Since an NFT is a representation of an underlying work of art, its purchase might not transfer the underlying intellectual property rights to the buyer. NFT buyers, in order to ensure that they have the license or right to use the artwork, must also get appropriate licenses from the author or creator of these artworks. So to say, even after purchasing an NFT, if the buyer does not obtain rights to use the artwork, the IP will still remain with the original creator. What is interesting is that most marketplaces for NFT transactions reserve rights to delete a user account or delete an NFT moment from its application. As per the existing laws, they, in fact, cannot be obligated to let their users know about it in advance. Big money attracts criminals. India has seen a growing number of money laundering issues over the past few decades. Considering the exorbitant amounts invested in the NFT market, concerns have been raised about whether they can be used to circumvent anti-money laundering regulations and find new ways of transacting with money in ways unknown. Because of their digital nature, NFTs can be stored anywhere, which makes their tracking and enforcement of laws quite difficult. Not only that, with technological advances happening on a daily basis, it would be difficult to predict whether a person breaking an NFT could actually be traced or caught. Smart contracts are digital contracts where clauses are written in the code and are embedded within the purchase tokens, with relevant triggers. Smart contracts mostly operate automatically when a predefined set of conditions are met with. Owing to the fact that the contractual obligations of these contracts are performed automatically, it follows that, in theory, fewer legal disputes should arise over the terms and performance of the contract. However, there is still ambiguity over the binding nature of smart contracts. Smart contracts are what govern NFT sales, making the transaction ambiguous and out of the ambit for most existing laws. The nature of NFTs, and the lack of laws around it yet, seem to leave NFTs in something of a regulatory blind spot. The legal implications of NFT ownership still remain murky, as far as ownership under law is concerned. It will, in all probability, take a couple of landmarks and defining court decisions to help owners and enthusiasts navigate the water. Despite hitting a 20-month low in production and domestic sales in December, the calendar year 2021 proved to be a record year for the tractor industry, with annual production surpassing the 1 million milestone and exports crossing the 1 lakh mark for the first time in history. Strong domestic sales momentum in the first half of 2021 and sustained growth in exports in the past several months pushed the total domestic tractor production for 2021 to 1,065,280 units, the highest ever annual number, as compared to 863,125 units in 2020. Total domestic sales grew 13% at 903,724 units in 2021 compared to 802,670 units in 2020, while exports recorded a 61% at 124,901 units, the highest ever annual export volume. In 2020, exports were 77,378 units. However, December 2021 saw tractor production and domestic sales hit a 20-month low. Total domestic sales declined by 27% at 44,428 units in December 2021 as compared to 61,249 units in December 2020. On a sequential basis, December volumes plunged 30% as compared to November 2021 sales of 63,783 units, according to data provided by the Tractor Mechanization Association. This was the fifth month of subdued tractor sales, and can be attributed to relatively high base and delayed harvest owing to uneven and prolonged monsoon. Accordingly, rural sentiments have been relatively muted, said Shamsher Dewan, Vice President Group Head, Corporate Ratings, ICRA. Total production was lower at 53,527 units during December 2021 as compared to 67,566 units in November 2021 and 91,969 units in December 2020. However, boom in tractor exports continued as shipments were higher by 7% at 11,186 units in December 2021 when compared with 10,491 units in December 2020. The growth in sales in December has been on account of a combination of factors, including the high base of last year and both delayed and very heavy rainfall in some geographies, according to Hemant Sikka, President Farm Equipment Division, Mahindra Ltd., which reported 21% drop in its December tractor sale. The tractor market leader Mahindra expects a recovery in the coming months due to good progress of Kharif procurement bringing liquidity in the hands of farmers and Rabi acreage showing signs of growth over last year. We expect a 2 to 6% decline in tractor sales for FY 2022. However, medium-term drivers aided by steady support to the farming community and rising mechanization trend remain favorable, said Dewan. Giving a further boost to Kerala's stakeholder-friendly caravan tourism policy, a leading manufacturer of automotive interiors and designer of specialty vehicles has rolled out a customized motorhome having all the features for a comfortable and luxurious stay. The spanking new vehicle of Madhya Pradesh-based Pinnacle Industries was officially launched by Kerala Tourism Minister P.A. Mohammed Riyad. He said that caravan tourism is a new experience that will put Kerala's pandemic-battered tourism on the growth trajectory, and the response from the stakeholders to the initiative has been quite encouraging. Tourist caravan is also a safe mode of travel for holidaying families in a world where safety is the most important aspect. Also read, Motoglamper set to unveil its camper caravan in Kerala. When this government came to power in May last year, tourism was in a very bad shape. However, the government did not panic. Instead, we resolved to move ahead with well-thought-out plans to regain the lost ground. It was in this backdrop that caravan tourism policy was drawn up, and it is proving to be a game-changer after the state made it big on the global tourism map with the promotion of houseboats in 1980s, the minister said. He said tourism department has ambitious plans to explore the unexplored destinations all across the state. This will present before the world the entire potential of Kerala to attract visitors to any part of the state. For example, the Malabar region is considered as one of the world's 10 most unexplored tourist destinations, which will be able to lure domestic as well as foreign visitors if properly projected. The government planned to identify and develop new destinations all around the state with the help of local self-government institutions, and necessary funds will be provided for the scheme, Riaz added. Built on Force Traveler Model T2 4020, the Pinnacle motorhome has less turning radius as compared to other caravans, which will allow enhanced driving experience. The motorhome has living and sleeping areas that can accommodate 9 seats, which can be converted into 2 beds, offering more comfort during the travel as well as staying in the vehicle. The vehicle has a lounge at the rear which can be converted into a queen-sized bed, along with a convertible bed at the front for the accommodation. With a provision for a kitchen, toilet, direct and indirect LED lights and mood lighting, hot and cold water, elegant control touch panel, circuits, mini fridge, LED TV, external power supply and backup, music system, 3 fire extinguishers, the motorhome boasts OFAL luxury, functional, entertainment and safety utility. Sachin Deshmukh, Executive Director of Pinnacle Industries, said the vehicle is designed by keeping in mind the comfort and convenience of end users while also maintaining design and functional aesthetic.